Very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. Excuse the noise. Just approaching 10:30 local time here in Milan, Monday, 8th of April, 2026. So the first trade of the day has been taken, AUD US dollar shorts. We can have a quick run through that. The position has already been managed to break even, of which I will inform you guys why I have done so. So if we take a quick look at the DXY, those that know how I trade recognize I'm using the DXY as the king catalyst of which it is. As we can see, there is a tremendous gap on the DXY as a result of, well, it's probably best not to mention the reasons why, but the fundamentals have provided a beautiful gap in the market. And we can see that gap has taken price all the way down to a 4-hour point of interest. With that said, we're also looking to reject that daily 50 EMA to the upside. Don't be confused by the fact that the current daily candle has indeed dropped all the way down below that daily 50 EMA. If we revert to how the previous, let me close the door. If we revert to how the previous daily candle closed, we're most certainly above that daily 50 EMA. So in line with my theory, in line with my strategy, I'm simply expecting potentially a retest of that daily 50 EMA for price to then push up and close above it. So the good news is the retest has already happened as a result of that gap in the market. We are below that daily 50 EMA and we've come into the liquidity underneath it. So if I was to ordinarily be looking for a long position on the DXY without the gap and price, if you bring your attention to the bottom left hand chart, if price had done this, dip below that daily 50 EMA into the imbalance underneath, I would be looking for the DXY to potentially push towards the upside. So that's my thought process at the moment on the DXY. And am I in a position where I believe that the DXY could potentially move towards the upside? The answer is yes. So with that then said, I've headed over to AUD US dollar. So if GU is in the if the DXY is in a position to move towards the upside, then potentially if I can look on the cross pair, figure out would I be looking to short any of those cross pairs. So for example, GU, EU and AU. Does it make sense to do so? So the first thing I'm looking at this morning is weekly time frame AU. I pretty much know where we are. As a result of a couple of weeks ago, we've had this bearish candle closure on that weekly time frame underneath that weekly range. Ordinarily, I'm then looking for price to pull back into an area of imbalance to the highs for then the price to have its push towards the downside, hopefully down towards that weekly 50 EMA where we can see price is respecting. So it makes sense at the moment, even on that weekly time frame. However, I'm looking to locate, can I see any imbalances in and around those areas to actually then provide me for that setup, or at least a picture looking good trade, if that makes sense. So does it look good first and foremost? So now bottom right hand chart, daily time frame, we can see much of what I've just explained on the weekly. It's just a little bit more it looks better illustrative wise. So we've got that break of structure on the daily time frame, looking for price to pull back into that area. Let me draw it on. So we had the push up, price is making higher highs and higher lows on the daily. We've then had that low created. So after a low, we're expecting a lower high at some point for a lower low continuation. So yesterday I was expecting price to respect this daily order block, respect that daily 50 EMA also, and then move down towards the downside. It wasn't to be. I think that was a break-even trade, if not slight profits on AUD US dollar shorts yesterday. Nevertheless, where are we today? So we've come into a wick imbalance, and as I always like to talk about wicks, wicks tell me that's where liquidity lies. For the reason that the wick is created, that is in this element price or sellers pushing price down from that market. So if I'm in and around that area, I want to see if I'm able to also take advantage of this previous sellers that had previously pushed price down. So I've made a note of that wick imbalance and I've superimposed it, as you can see, on the daily 4-hour and also into the 15-minute time frame that we'll go to in just a moment. So in and around that wick imbalance, of course, I'm now looking for reasons to take a position. Unfortunately, if I make that slightly bigger, We do not have any 4-hour order blocks available on that 4-hour time frame. However, what I can, or what I did clearly see on that 4-hour time frame is this. So price came in, made a low, came up and made a lower high, and from this area we've had a low created. So we've done a bit of holding around, we've got that correction in the market back up to that area of imbalance, of which was used, hence why I could not take an immediate short, which we'll talk about in a moment, on the 15-minute time frame. So what else can be mentioned on that 4-hour time frame? Well, we've got some trading range down to the 4-hour 50 EMA. Also against us, unfortunately, today is the daily 50 EMA as a result of yesterday's daily candle closing bullish above that daily 50 EMA. So that would be a management area for me as well in terms of looking to take profit. However, as you can see by my tool at the moment, I will be well out of the market much before then anyway. So I've had to reuse this 4-hour order block. Price wicked in and gave us that push towards the downside. We've established that. So within this 4-hour order block now, I'm now forced to look for refined areas of which I can take a short position from. So let me bring the 15-minute time frame up large for you all, and we'll talk about it. So here we can see there's that wick imbalance from that weekly time frame. So price is very much so in and around that area. We're trying to take benefit or take advantage of the fact that a wick was created, and we're trying to see exactly if we can jump on that again. Now, refine within that 4-hour order block, excuse me, we had a 15-minute order block right up at the highs. And as I've mentioned, because I'm reusing this 4-hour order block, I'm not able, based on my strategy, to simply select a sell from this area because the 4-hour has already been used. So I need to see something else come out of the market. And that's exactly what we've had. It's an aggressive trade, and it's one that I like to talk about. So price came into that 15-minute order block, and straight away we had a reaction from it. So on the lower time frames, this still was not good enough for me to have price break a 1-minute structure point, come back into the area of imbalance to sell. So that first short would have been from in and around these areas. However, because as I've mentioned, I'm reusing that 4-hour order block, I want to see something better on the 15-minute time frame. So what I've done is identified an area in the market where I'm looking for price first and foremost to break, and that is here, this low in Asia. Well, the Asia range itself. So price came down, created its first low in Asia. So I'm looking around here. Price came back up, and then we've had that significant break. So for me, coming to the charts and seeing that, I want price to then pull back up to an area of interest before looking for the sell. But again, because this happened in Asia, I can't just look to sell from a reused order block. I must then restart the whole process again. And that's exactly what I've done, and you can see it here also. So as a result of this bearish engulfing candle, I was able to select an order block at the highs here on that 15-minute time frame. The importance of this bearish engulfing candle is not only have we broken immediate structure points on the 15, on the 1-minute time frame as well, we have done that, leading to the fact that I was able to use this order block and select a sell limit once price then came up and tapped that order block. Now, as a result of this being an aggressive trade, as I love to preach, must be also managed aggressively. So the fact that we are very much still bullish as a result of, if I was to look at this with different glasses on, here is the most recent higher low created. So as a result of that high, we now confirm, in my opinion, this entire area is a higher low. So the safest opportunity, first and foremost, would be to wait for this to be broken, to then pull back up, to then take that short position down. A more conservative approach would be, let's highlight this entire area in the market, wait then for a price to develop, i.e., as I've drawn here, lower low, pull back, lower high. That's very much so a conservative approach, and the aggressive approach is what I've taken now. So as a result of taking that aggressive approach, I must also understand that we're in highs, This could well be a higher low. Although price hasn't made a higher high from here, we have an imbalance. And as you can see, price is holding in that area at the moment. So what I am expecting to some certain extent or certain degree is that we do have a reaction from here. If not, take me out break even. In a most idyllic scenario, then we'd have that break. Then I would definitely be expecting a pullback back into a 15-minute imbalance left behind at the highs, before then looking to compound if I'm still in that position, or if I've been taken out break even, then I'll just look to add the correct position or the better sell position to the trade. So that's the breakdown at the moment. That's the only pair that I have traded this morning. In terms of DXY, looking for confidence, it's very nice confidence to be fair. So I entered that around 8:30, I believe. Yeah, just there. And if we look at the DXY at the same time, so again, we were expecting a turnaround on the DXY, forecasting a turnaround on the DXY based on the higher time frames. Now, based on the lower time frame, as soon as we go down to the 5-minute time frame, and in fact, I was looking at the DXY on the 1 minute, but the 5-minute also paints a half decent picture. We simply say one line will do it these days. So if we highlight this area in the market just here, and if you say I entered my trade at 8:30, what happened before 8:30, before my entry, what happened on the DXY? We had a break of structure on the 5-minute time frame. So for me, knowing that it's an aggressive trade on AU, can I also support my trade with an aggressive potential entry on the DXY, or at least can I recognize the DXY has turned around in an aggressive manner? And the answer is yes, I could. So as a result of this break above this most recent area, again, still the same must be recognized, that this low was created, this most recent lower high has not been broken. But what we can see is intricate structure points most certainly have been broken. So this was the first break, leading to then, if I was to take a long position on the DXY, it would be somewhat similar to the short position that I've taken on AUD US dollar, just like that. So the inverse operation. And as we can see now, the DXY is having its reaction from this area, and in contrast, so is AU at this time. So that's the quick breakdown, to be honest. 12 minutes. Hope I haven't taken too much of your time, and most importantly, I hope you're able to gain some insight into my method of trading from that. So all the very best in your trading journey, everyone. Stay disciplined in the times of uncertainty, but it's just one of those. If this is the new normal for us, then we need to adapt in the markets, right? And the best way that I figure is the best way to adapt is not so much adapt your trading strategy, but at least adapt what you're using as confluence. So instead of me looking at GU and EU for confluence to take an AU sell, I am very much so fixated on the DXY. Is the DXY in an area where I can expect a reaction from in the opposite direction? Or if I'm looking to trade US dollar CAD longs, does DXY look as if it's in a nice area where we could potentially trade the DXY to the upside? So this is exactly what I'm doing, using the DXY as the catalyst for the trades. More so than even the cross pairs that I'm trading, and just ensuring that same level of detail that I'm using to conduct analysis on the pairs that I actively trade, that is also done on the DXY to give me the highest probable opportunity to take a favorable position. So as we said, all the very best in your trading journey. I appreciate the support across all the channels, particularly on TradingView. It is not unseen, and as I said, I very much so appreciate it. All the very best. I shall indeed keep you guys updated on this trade, and if I look to refine those areas, so back to the 15, where am I looking to take profit? Just the imbalance of that engulfing candle, to be quite honest, before price gets into that daily and 4-hour 50 EMA on the rejection, perhaps toward the upside, I'd be well out of the market at that point. So that would be my take profit around about 4%. Again, all the best, team. Take care. Hear from me soon. Charles.